We constantly get asked like, oh, you're like LendingTree or you're like Rocket Mortgage, and we're not.
Okay. So what makes us different from LendingTree? Just LendingTree. We'll start with LendingTree.
LendingTree takes your information. It aggregates all the data. You put in,
how much information are you providing LendingTree though?
As much as you want, but they ask for everything. They want your social. They do a soft pull. They want address, their resident history, home value.
A soft pull? What does that mean? I think it's something else when they say soft pull.
It's a soft pull. Is not a hard pull. And
is it like just the tip?
It is in a way. Basically, a soft pull is requested by. So when you have a hard pull, it affects your credit, so they say, very minutely. But if you have a hard pull, it's requested by the borrower or the person that has the credit, and a soft pull is requested by the entity or the company. So it doesn't affect the borrower's credit because they're technically not the ones requesting it. You get a soft pull for one bureau typically, and it's not as accurate because it isn't a hard pull. So there could be some liabilities or like monthly payments or trade lines, which would just be an account on credit that don't show up on a soft pull that would show up on a hard pull. So, and we'll get into that later. We talk about a whole other episode on credit and scores and who pulls what and why. And
who pulls what?
Yeah, who pulls what, where what goes. And how that works. So, yeah, LendingTree, you put all your data in there, and then LendingTree just connects you with all the lenders. So basically, you'll get called by all the different lenders.
So how many lenders does LendingTree provide? So if I was filling an application,
yeah,
and I submitted it, my phone just basically shuts down with phone calls, correct?
Yeah, phone calls.
How many people do they sell my application to? Like as far as bankers or brokers?
It could be anywhere from 20 to 40. I don't know the exact number, but I know that every single time, it's a lot.
Yeah, I think it's a lot. I think it's 10.
It's very 12. Consistent phone calls for days. It's kind of like when you go through a breakup and you want to block them, but you don't. And then
you still want to see what they're doing?
Yeah. And then you regret it every single time.
Are you the one getting broken up on, or are you the one doing the offensive breaking up? Offensive breaking up?
I'm not good at breaking up. I just don't touch it, and then I just
ignore it and just let it go.
Force them to break up with me.
Okay.
Which, if you're out there, I'm sorry.
That's very admirable.
No, it's not. It's very manipulative, very bad. But
so how are we getting on the dating room?
Yeah,
for this one.
All right, so back to LendingTree. So you get called by like all these people, and your phone's blowing up, and you got the sharks of every bank. Like, hey, we can do this, we can do that, we can do this. So they call you. You have to do a whole other application with them, or get more information, and they'll give you a rate. And so you're trying to process, unless you really know the industry and you know the insides and outs and you know the terminology that they're going to use. You can go to one bank and they're going to say, oh, you can have a 3.5% interest rate and nothing out of pocket. You go to the next bank, like, oh, it's a 3.75 and you're going to have $1,000 closing costs. They could roll in all of those fees into your loan amount and be giving you a 3.5%, but you're actually paying for it. Maybe you're paying discount points or an origination fee. So there's a cost associated with it, but they say nothing out of pocket because you're really not going to have to pay anything out of pocket because they're going to roll that into the loan. They're going to finance it in.
So for me being a user, a consumer, or someone who wants to get a mortgage, that sounds pretty confusing. So how do I know for sure? Like what's a key indicator on this type of transaction where I would be able to identify that?
So every application, you're gonna get what's called a loan estimate, and that is a few pages. That is a very detailed breakdown, line by line.
Like a disclosure, just breaking down every item on.
It's an initial estimate, so it'll break down.
Cost of borrowing.
Yeah, every single loan estimate is laid out the same. You got section A, B, C. And A is the origination fees and points. So it discloses exactly what that is at that time. But you don't know that when you're talking on the phone, and unless you have, taken the course and you're a mortgage licensed person, you're really not going to know what all those are, what to look for or any of that. So you kind of become the deal is only going to be as good as you can make it, right? So whatever you can understand, there's people that will go through and try and learn as much as they can, and they keep trying to call, but it's just very easy to be taken advantage of, and you really don't know if you're getting the best deal. And the people that do have spent a lot of time figuring it out. They're going to talk to 10, 12, however many banks that they want. And they're going to have these long conversations and review these loan estimates and try and find if there's any fees. And it becomes a headache, and it's definitely a hassle.